Welcome to Bitcoin Escape Plan. Bitcoin has just had a massive victory on the 4-hour time frame that tells us a little bit more about what we need to see for momentum going higher. In today's video, we will go over the key levels of support and resistance that will actually tell us before it happens on the chart which way is the price going to go. Later on in the video, we will go over the higher time frame so we have the better context, historically speaking, of how the price behaves during this time of year. And if you're enjoying the content, feel free to let YouTube know with a like, a comment. If you have any insights or questions about the markets, feel free to leave them down below. And if you are completely new to the channel, you can subscribe over at bitcoinescapeplan.com. Every Monday, I release an in-depth newsletter that goes over the key levels that we need to see for the week. And in this week's video and newsletter, I made a Star Wars reference. So if you're my friend, go subscribe. All right, let's get into it. 4-hour time frame for Bitcoin. This is what's important right here. This is all that actually matters. This is the bottom band of the anchored VWAP. I will put my course thing up here so that you can go watch that video if you want. I'm not going to explain it again, but essentially this acts as a magnet. We have just broken through that magnet and we are headed towards the next point of polarization, which is 83.9K. I do not believe that we're going to get to 83.9K, but that is structurally what is happening on the chart at the moment. So since we have broken past that, we now need to see what locally around here could form as realistic support, and that's 69K. Now we'll go over this more on the higher time frame, but 69K is the second 2021 all-time high, therefore being a very, very important psychological level to either confirm as resistance or support at this stage of a bear market. You know, it's kind of like having landmarks. Like if you don't have your phone and you're driving home from work, you probably know how to get home once you get off the highway to a certain point because you can recognize certain landmarks. It's the same thing right now for Bitcoin. The price recognizes 69K, it recognizes 73.8K, and we're just trying to see where we're making the right turns or if we're getting lost because we can't remember very key things. And what's most important for us to remember is since we are in a bear market, forget all the other content creators who are telling you that the 4-year cycle is dead. Until proven otherwise, we have to assume that previous levels of all-time highs and past cycles will initially form as resistance instead of support, which again, we'll go over in the higher time frame a little bit later on. So most importantly, on Sunday, we had a break of the 4-hour SMA significantly to the downside. This was right around the candle close for the week. Say thank you to the bulls. They really, really wanted the price to be closer to 69K for the close of the day and the week. And quite frankly, that's a very good thing because it was looking ugly until that point. You know, we were all the way down here at like 67.3, which is just not high enough for it to be a relevant close or for us to have any real momentum towards the targets that we've been talking about for several weeks on this channel, which is essentially another retest and failure at around 80K, which unfortunately gets lower and lower every time I say it. So at the moment, we've shown some strength at that 76.6K pivot. We had to retest it and fail it a little bit, but we're able to wick it, break back down, and then break way above it, which again was just a decision of the bulls that they wanted the last 30 minutes of the day to be exciting, which is dope. So that happened. 67.9K, 68K was basically ignored at that time. I wouldn't really think that one is that relevant. For this one in particular, I do think that it's 69K. So, and that's the thing is like sometimes your instruments are going to tell you what's important, and sometimes you just have to understand history. In this particular instance, the instrument was useful. In this particular instance, the instrument was not useful. However, the retest of the weekly SMA and the this is the 4-hour SMA, with that continuing to slope upward pretty aggressively, that's a good thing for the price. And I would imagine that we actually don't interact with it again until probably this. Like we would expect the bottom band of the anchored VWAP to end up forming as support here. I actually just added to my trade position, which I'll talk about at the complete end of the video. But I added that because this was looking like it was going to form as support and we have a little bit higher to run. Although I do think there's quite a good possibility that we're going to get invalidated around 72. We need to see, this is 71.7. We need to see strength around there, and it's still too early to say. We don't really have enough positive momentum, especially after, you got to think about over here, we did not have a trend line retest, and here we just broke below it multiple times. So our bullish case is looking weaker and weaker as time goes on. So those are the most important things to focus on in the 4-hour time frame. I will return to this later when I talk about the trade at the end of the video. But essentially, because we have broken back below the bottom band of the downtrend anchor VWAP, this is drawn from the 126 all-time high. We can assume that we will continue to trend towards the middle band, which is at 83.9K. And the two most important psychological levels that are between here and there are 69K, which we are already showing strength at, even though we are retesting back down toward it. And then, of course, 73.8K being the March of 2024 initial all-time high, which is like right around here, where we're going to intersect with that trend line. This trend line, which is a little bit easier to see on the higher time frame, this trend line is going to completely intersect by April 23rd, April 24th. Now, what does that mean? What that means is the price is either going to be on this side of the trend line, or it is going to be forced on this side of the trend line, and it's going to be pretty obvious what it's doing. Like, we won't be confused. We won't be confused if price is up here that it's magically going to drop down lower. Now, historically speaking, it still most likely will, but it would be more indicative that it would continue to consolidate until we have another interaction with here. But functionally speaking, we'll have that answer by about April 23rd, April 24th. That's why I continue to say that I am expecting a higher low at that point. And this is not rocket science. This is just the trend line that's drawn from the 126 all-time high. And this is just the trend line that's drawn from the 59.9K recent lows. Again, this is a little bit easier to see on the higher time frame. So before I move to that, all that we need to know is this downtrend from 72K, which was the first time we hit 72K after the drop to 59.9K, this guy right here. We did interact with that quite a bit. Technically, it's already been invalidated. I have left it because I still think that it's functionally useful to see how the price behaves there. And it did have a strong interaction with the 4-hour SMA right around there. So again, for the moment, we are out of that hot water. I don't know what this is, if this is a parallelogram or whatever the hell that was in geometry, but that's what we want to think, is we want to think that the price needs to stay on this side of the blue line and on this side of the red line if we want the price to go higher. Otherwise, we can expect it's going to reject this side of the red line, which is then going to push it below this blue line until it finally gives up and commits ritual seppuku and heads down below that line later in the year. Again, this is what gives me the basis that we are going to see a lower high formed and not a higher high. And what would that mean functionally before we move on? That would be about, this is 72, where is this guy? This guy here. This is 76K is the highest that we got there in March. So we would expect the price is probably going to form a high lower than that. Possibly even lower than the 74K peak, which I think would be super important. Again, psychologically speaking, that's the, let's jump over to the higher time frame and I'll show you. Psychologically speaking, that is the March of 2024 peak, which is super important because you got to think, the average age of a human being in these candles is significantly older than it was in any other time period before, because these are the people who were buying the IBIT ETF, that, to me, that's the only one that's relevant. Like that's honestly the only one that I study. But the other 10 or 11 ETFs that were all approved in December, January of that time period, that's where all the money came from, is from, the people who have Fidelity accounts and Charles Schwab's accounts or whatever that really, really trust their financial advisor about, oh, you got to get this new Bitcoin ETF. That's that pump. That's how high that one ran to. It ran to about 73.8K. Psychologically speaking, that was not psychologically, mathematically speaking, that's the first time that had ever happened on the chart. We had never seen a new all-time high that early in a halving year, even before the halving itself took place, which I believe was in April or May that year. Forgive me, nerds, for not knowing the exact date. Please leave it in the comments if you do know. But like that, I think fundamentally altered this cycle and how high we were going to get this cycle, which is not that important right now. We're gonna keep it moving, but that is, I believe, what caused the volatility to be less is because we already experienced multiple psychological all-time highs, being the first break to a new one of 73.8K. And then I just think, functionally speaking, 100K is more important than anything else locally. So the main story was 100K, and the fact that it ran past it doesn't really matter. So that's what we're looking for at the moment. Kind of in the same way, if we think about it, the best other example of that before I move on is in 2017, we broke 10K, and 10K was actually the important psychological level. And then we continued, obviously, almost till 20, but 20 didn't matter. 20 was just a little bit of whipped cream on top of your ice cream, you know? Like it did not really change what the important level was. The one that we continued to retest and spent a long time around was 10K, and I really believe it's gonna be the same for 100K. I've talked about this multiple times before. If there is only one narrative that all of the news stories can run for 2026, it is how low can Bitcoin go? The only news story that they will be able to run for 2027 is, can it reclaim 100K? If it reclaims 100K before that, one, they lose the value of the how low can it go narrative, and two, they have nothing to run in next year's newspapers or whatever, online publications. I don't think they even have newspapers anymore. But like that, especially if you're watching this several years later for whatever reason, newspapers are these pieces of paper where they used to type the, all right, I'm going to continue. That's what we can expect for the most part, is that it's going to be a long time before we interact with this monthly SMA again, which is currently sitting at about 90.3, 90.4K. Now, historically speaking, we have a period of about 8 to 12 months once we have broken the monthly SMA before we interact with it again. We are now on month 5, which means we have another minimum 3 to around 7 months, roughly, before we have another interaction with the monthly SMA, which is not guaranteed to break above it right away. And this is actually, I talked about this a little bit in the newsletter this time. Essentially what we're waiting for, and again, subscribe at bitcoinescapeplan.com. Essentially what we're waiting for is to see, is it more similar to 2022 or 2018? In 2018, it was a shorter period of time that we were below the monthly SMA. However, we did have a more significant failure again, which I think is quite possible. It wouldn't happen until next year, but it is quite possible that that could be the case, where we see a quicker reclaim of it. I mean, this is still all the way into 2019. We're still looking at essentially the same time frame for it to bottom by Q4 of this year. That's still, according to the chart, that's what it looks like at the moment. Other than, again, we have been left translated, so it's possible that it happens slightly earlier, but that's got to be our base case. That's somewhere between, call it September and December. We will see the lows form. But do we see a quicker reclaim of the monthly SMA that inevitably, this is COVID, obviously we can't predict for COVID, but even before COVID, we had another significant drop down back towards the monthly SMA, as opposed to in 2022, for the most part, once we reclaimed it, or 2023 rather, once we reclaimed it, we were done. You know, we were moving, which partially was probably because of the ETF news started around here, and it took them all that time to finally get them approved. But that was like a big liquidity news story that really, I think, prevented us from needing to retest the monthly SMA. And I'm of the opinion it's probably going to be similar to this one again, because that primary news story, before I continue with the rest of the analysis, is just the stablecoins narrative. The stablecoins narrative, I really think, is it's like you're trying to fill up the tub. We've been trying to fill up the tub by going into the kitchen with a bucket and filling it up in the sink, and then going back to the tub and pouring the bucket in, and then going back to the kitchen. And what happens when the stablecoins go live in January of 2027 is now we can just turn on the faucet in the tub and put water in the tub the way that the tub maker created it. You know what I mean? Like that is functionally going to change the amount of liquidity that flows into Bitcoin. Now, I don't believe it's necessarily going to change the psychological nature of it. It will impact the volatility. Like I said here, when we had that all-time high in 2024, I really think that reduced the possibility for us to get 130, 150, 180, 210. It reduced the need for it to happen because we already had a major psychological victory, and then we had another major psychological victory at 100K pretty much before 2025 had really even started. Like we were already climbing to that price, by December of 2024. So that kind of ripped the rug out from underneath us of what we could even experience in 2025. And quite frankly, we're lucky that we got 127 or 126.2 or 0.3 technically, if you're a math nerd. Like that we're lucky that we got that, because functionally speaking, the important narrative is 100K. And I don't really think that that's going to change moving forward. I think that the price is going to be magnetized towards certain levels because they're easier to write a news headline around. Like that's it. That's how the world functions. I hate to break it to you. Same thing for gold. Like gold is going to behave more predictably or more irrationally around key levels like 5,000 and 10,000 as opposed to 7,341. Like nobody's writing an article about Bitcoin being at $90,375. Like it's not going to get as many clicks, and we live in an attention-based society. So that's how reality functions, is the story that they're going to cling to is the easiest one for the most people to wrap their heads around. All right, enough of that ramble. I'm so sorry. I'm going to get back to the price. So the same thing is pretty much happening that we always talk about in these videos, which is we are expecting this weekly SMA to continue to drop lower, which it has. So we talked about this in yesterday's video. It has not dropped quite to 76.2K yet. And as you can see, it's starting to slow its descent slightly. So maybe instead of crashing into the tarmac, we may actually be able to land on the tarmac. But essentially, that's what we're waiting for, is we're waiting to see where do we interact with that weekly SMA, and does that occur above or below this 76.2K pivot. If it happens, if the price gets to 76.2K and the weekly SMA is still above it, 76.2K is going to form as light support, and then we are going to break slightly above the weekly SMA and likely continue to crumble down. Whereas if the weekly SMA continues to drop down here before we even interact with it, we may barely have a break above 76.2K in that instance, even if we do reclaim the weekly SMA. Very similar to if we look back to 2022, essentially the same thing as this guy here, which is right into the end of March and early April. The weekly SMA is continuing to slope downward. It breaks through the 47.6K Fibonacci pivot at the time. The price is barely able to get above the weekly SMA, and it fails on the Fibonacci pivot, forms it as resistance, and then continues to tumble lower, which is my baseline expectation. That is what I think is going to happen most likely, is that we see a lower high formed probably in both April or May and June, July. So there's a possibility that this does extend into May. The only difference being we got pulled left quite a bit. We already lost the weekly and SMA and weekly and monthly SMA considerably earlier than we typically would in a cycle, which does not really speak to us getting higher highs. It speaks to us getting lower lows, and we can continue to anticipate that. And the only thing that is different is the Clarity Act this time around. Like I said, with the stablecoin bills, depending on the decision that they come to in July, that will impact the price short term, but it will likely be a buy the rumor, sell the news event instead of something that's going to be a positive price catalyst ongoing. I talk about this already in every single video. But 64K and 76.2K is the important range that we're stuck in right now. We're still below the 50% mark. The 50% mark is right around 70.2, 70.3K. Until the price is comfortably above that and staying above that, it's in a little bit of trouble, period. It just means that it's below the 50% mark of the range, which puts pressure towards 64 instead of 76.2. That's all it is, Like we've been stuck there since February until we're able to comfortably continue to get closes above 70.2, 70.3. There's just no reason that this is not going to form as resistance instead of support. And it's still my opinion, quite frankly, either way, that it's going to form as resistance and not as support. Let's talk about the trade. So what did I just do before here? And again, anyone who's following this, other people are making money off my system. I have already made mistakes with my system, but it does work. Technically speaking, this would be a short. I'm in an older position, so I got to play the hand that I currently have, not the one that I would like to have. So what I actually did is, right before I started recording this video, on this 4-hour candle, we started to drop down. I think I bought it literally at that Fibonacci retracement level, like right there. It's still quite possible that it drops a little bit lower. And that's fine with me. I would probably top it up a little bit more depending on, we're about to hit the overnight. The overnight should be in 2 hours, 3 hours, something like that. So I'll have to manage the position at that point to make sure I have enough margin available. I'm still in the learning phase for these perpetual trades in general, but for the most part, what I've seen so far is it's pretty reliable. Other than these breakout cases, I would not have wanted to short that. This is a better short entry, but even then, in a period of expansion after significant compression, sometimes it's okay to just do nothing, like just to wait, essentially. It really depends on the time frame that you're trading this on. I do definitely prefer the 4-hour because I feel like it gives more clear evidence of your entries, and then exits. You just either have to set arbitrary percentage-based points, or you can pay attention to a retest of the SMA or a retest of Fibonacci pivots. But as you can see, sometimes the Fibonacci pivots are not reliable, though I will say the SMA is even less reliable because there's no guarantee if it's going to go above or below it. You're basically flipping a coin when you hit there, which is why I think it's way better as an exit point, because you take your little 2 or 3% trade at 10x leverage, you just made 20 to 30% on your money. And you should be very happy. You should say, thank you, Bitcoin. I love you so much. And you keep it moving. That's really all you can do. So me personally, I'm just waiting. I think my cost basis is actually down to 72K on that position now. So that's pretty much what I personally am waiting for on being long, is I'm waiting for another move towards 72. And at this point, I don't even care if I'm $30 or $40 in loss by the time I rip the cord. I just want enough of my position back that I can start taking good entries instead of a foolish entry, which again, just for the record, would have been like 130% trade had I just not been a baby and just allowed the short to run instead of flipping and changing my mind. So I really think for anyone who is, trying to trade this market rather than just sitting and waiting, you really need to have strong conviction on your rule set. And then don't break your rule set, dude. Like, why? Like I don't even have a good reason why I broke that rule set, And even now, I suppose I could add the rule set for me adding to position here, which again, this indicates a short. This does not indicate a long. The only reason I really added to it there is, one, because I believe I was not asleep, but I wasn't paying attention or didn't have my phone in my hand when we had the retest here. That would have been the more clear top-up point, I think, again, just because psychologically speaking, or mathematically speaking in this case, because we got back above that bottom band, that's what I was looking for. That was the event that I was looking for, essentially, to be willing to top the position back, which I'm playing defensive ball at this point. I'm just trying to reduce my cost basis on this position so that in the event the price gets up there, I can either take a little bit of profit instead of completely losing on the trade, which I gotta be honest, is fucking crazy that you can do that compared to, good luck doing that on a meme coin or an option contract. If you do that, if you double down on the position, you are considerably more likely to lose more money than in this case. Again, this is based on technical analysis. If you're someone who's been following me for any period of time, I spend a lot of time on this. I write a thread every single day that's not Saturday where I'm analyzing the chart. It's not like that's the extent of me looking at the chart. I look at it before that. I look at it after that. I'm spending a long time understanding the key levels that are actually going to dictate the momentum. And this is a huge one. Seeing us break back above that. Obviously, this instance, we didn't stay there. This is healthier. That looks healthier. Now, do I think that it's going to rip to 80 or 86? No, I don't. It's looking more and more likely to me that we're going to fail the next time we get to 74, which again, super important because the bulk of human beings who bought the ETF around those prices, they're going to remember that. They're going to remember that price. Oh, damn, this is where it failed last time, you know? And we are essentially in a game where there's not enough volume between about 72K and about 86K, which means there's no human beings on the other side of that buy sell button that have feelings about those levels. All these people have feelings about these levels. All these people have feelings about these higher levels. What we need to see is that the conviction of the individuals up here does not soften as the price is only 5 or a 10% haircut for them instead of a 30 or 40% haircut. You need this not to thin out at that time while this is expanding. I think it's pretty likely that a decent amount of this is going to thin out at that time, especially for anyone who is slightly educated on the charts, or again, just paying attention to the news and the relative uncertainty that is going on at the moment in the markets. So me personally, that's what I am focused on. Now, for somebody else, I would imagine this will end up being a solid short over the next couple days. Like I said, I'm forced to play a defensive game where what I am doing is specifically trying to get my cost basis such that I will be in less significant loss or even potentially profit at 72. And I may or may not be willing to ride for the retest off 73.8. I'm probably going to get out of the position so I can just relax and reset my cortisol levels for a little while. And then I will most likely short once we see an interaction with this trend line. Obviously, I want to stick to my rules as well. I want to see an interaction with the Bollinger Band to the top side before I'm making a short at that time. But it's very hard for me to believe that we are magically going to stay on the other side of this red line and just continue there. I think it is more likely that, again, by the time of April 23rd-ish, that we have confirmation of, even if we are above this line, it does not mean that we stay there. And we actually have to make a decision between, are we above this blue line and therefore above this red line, or have we broken this blue line and therefore need to retest this red line? And then obviously it's pretty clear that the price continues to go lower and lower at that point once we have decided we need to be below this line. Once that forms as resistance instead of support, over here it could be support until we have another interaction with this. And that's when we start to really push down. And again, psychologically speaking, there's not much going on here. There's no human beings here that have strong feelings to defend these levels as they go up. This would have to be new people, new money that is entering in a time period where there is massive uncertainty, where the cost of goods and oil is continuing to rise. I don't see it personally. I see it's more likely that those individuals above are going to trim some of their positions. This will fill out more, but it's not going to fill out enough where it'll become the point of control. Like, it's not going to become, the dominant position on the price. The dominant position on the price is 27.1K. That's still the most humans who are in Bitcoin at the moment have a cost basis from 2022 and 2023. Or technically super early 2021 as well. But for the most part, those are the individuals at that highest point of the volume. And then the other point is right here at 67.5. That's pretty much the same as some of these other levels, So we have seen a lot of volume step up recently, and it is primarily buy volume, not just sell volume, but it does not mean that it's enough to prevent these individuals from selling, from that thinning out, and from that probably pushing us to want to thicken this section, which again is very likely for us to happen if we start failing down towards 64K again instead of 76.2K. If you have any questions, feel free to leave them in the comments down below. I will, of course, give an update on Wednesday as well. Oh yeah, I meant to say that earlier in the video. If you're watching this, I release videos every Sunday, Monday, Wednesday, and Friday. And of course, you can follow me on Threads, where I write every single day, except for Saturday, because that's the day I do parkour or have a life. This weekend I just worked, but that's okay. That's what we're looking for at the moment. Sustained strength above 70.3K. Let's hope that we get it. We'll keep you updated. Have a wonderful day, everyone.